following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
We are back to NinjaTrader Live. I'll be your host of this segment, Tom Schneider, CMT with NinjaTrader Traders Workshop, where we bring in our NinjaTrader ecosystem partners. Today is no different. We're having back on the show Shark Indicators, specifically Jeremy Tang and Zach White. How you guys doing today?
Great.
Hey, good morning. Yeah, happy Monday. Is that a thing?
That's right.
We're making it a thing, Zach.
Midsummer Monday, you know.
Yeah. Your dog days of summer, right? August.
Right.
But as we can see, things can happen any given day in the markets.
Yeah, NASDAQ thinks it's a happy Monday.
That's right. We're getting a little bit of a bounce. So, we've had the pleasure of having you on this segment for the last couple of weeks, well, more than a couple of weeks, talking about different ways you can explore and automate some of your trading ideas. I think this is really where the rubber meets the road, though, today, which is backtesting. I love this subject, and I know you have all the great tools to talk about it. Jeremy, maybe you want to start and just give us a little bit of a rundown of how you look at backtesting and what you can do with Shark Indicators.
Yeah, I mean, for years we've been basically giving out this message that backtesting is a vital part of becoming a professional trader, or maybe a consistent trader, or if you're taking this seriously enough that you want to be consistent with the results. And one of the things I think that a lot of people don't make that leap is, if you want to do sort of backtesting on the computer, right? There's always kind of two ways to do it. You can do it manually, like hit the charts and, open up your charts and basically, go through your indicators and your system rules and just mark them up manually and tabulate it in an Excel spreadsheet, or, even write them down, or whatever, whatever manual method you've got. And that's so tedious that most traders just simply don't do it. And I don't blame them. I mean, like, you think about it, like, imagine you've got like hundreds of trades to pour through, charts and different instruments. Then you make one tiny tweak and you got to do the whole thing all over again. It's just, it's so almost, I would say, it's pretty much impractical to do it, to do that manually. But I mean, there are people that we've seen that actually do that. And of course they take their profession very seriously, but most people don't have the time, or really even the the discipline to do something like that on a continuous basis. So and if you want to make the leap and actually do it on the computer, well, you actually need a full-blown automated trade system. When you think about it, right, you have to tell the computer when you're going in on the trades, when those trades are, how that trade is going to be managed throughout the life of the trade. You have to have your exit signals, like even the order management has to be like described in terms of like, are you going to go break even at this certain time, et cetera, right? That's as we established the last time we were here, that's a very important part of the system as well, and actually can be a big difference maker. So it's not just your entry signals, but all those things have to be programmed in and described into the computer. And that's really just out of reach for most people, especially if you don't have a programmer on staff, or you're not a programmer yourself, which is the majority of pretty much everyone, when you think about it, except for, a very small elite number of people. So that's kind of where our tools come in. And today we want to demonstrate how you can use our tools without any coding knowledge and be able to just just build a system from scratch. And use it to backtest. And we showed, in the last couple of weeks, how to build a system and automate it. So now we're kind of at this point here where we want to show how we can actually take those systems and then analyze some results out of it.
Great. And Zach, maybe that's that could be a cue for you to explain, what we're seeing on the chart here with the tool. very, kind of a basic strategy that we're going to go through.
Great. Yeah, that's definitely my cue here. Let's see, where are we? Yeah, I do have one kind of trade showing up here on the chart. Right, but I've also got the strategy analyzer queued up, right, which is really good, to even further take control of your time there, so we can backtest a basket there. So just a quick overview. I'm using that classic stock signal that we've been kind of sprinkling in throughout these interviews here, right? So it's that's classic stock signal, right? It's where price crosses a 30 SMA. We need the MACD histogram crossing as well. And the one thing I'm missing here is the stochastics on my chart, right? So you get those three indicators being crossed, and there's your entry signal. All right. So I do have one trade here that kind of showed up here. So going short there, and then yeah, and it got out there. So I thought it'd be, the one thing I don't kind of remember about this classic stock signal is them teaching you when to get out, right? Right. So it's so important there. So I thought it'd be interesting, either using the SMA 30 or maybe the super trend, a newer indicator that a lot of traders seem to like. Yeah. So I kind of set up Blackbird to utilize to trail a stop loss. So this is a runner type system, as they call it. So there's no profit target. Just trail your stop loss there up until it gets hit there. So
and that's the thing about trading systems, right? Is we often think in signals binary, kind of yes, no, long, short, or in a trade, out, not in a trade, kind of one option or two options for the same indicator, right? But what you're saying is, let's take multiple indicators when they line up, let's call it, and when they all line up, we're gonna do this thing. But then you also have, how do you get out of it, like you said? And that's the great thing about systems is you can identify multiple ways to get out of a trade and put that into your system as well. So it's not just like, we're going to use this indicator when the three line up, we're going to go long, and when the three line up to the downside, we're going to get out of the trade. We can use really whatever we want to get out, whether it's a trailing stop, whether it's an absolute stop, whether it's a target price, whether it's another indicator completely different from anything we've used, right? And that's where the complexity comes in, especially if you're doing this manually, right?
Yeah, right. Back in the old days, when I was taught this classic stock signal, I'm sure they were probably using the SMA 30 or maybe an SMA 50 or something like that, right? But nowadays we have even fancier type of indicators like the super trend out there. So
sure.
Yeah, so why not, test against some of those newer ones, and maybe somebody did invent a better mousetrap out there, right? So yeah, so that's kind of the setup I've got here. And then another thing, I did create a short list here. Let's see, where is it? Indicator list. Yeah, I did create a short list of S&P 500 and I think some Dow here that I threw together into a small list, so that way, obviously, if you're interested in trying to find something like that, to add to your 401k or whatever, your own discretionary stock trading system there, right? You're probably going to want to ultimately probably backtest against the S&P 500, but just for the sake of our time today, I made a shorter list here of stocks there, some bigger ones that everybody knows, Apple, Chevron, IBM, Lilly, what and so forth. So, and then I've also have the strategy analyzer all kind of queued up there for us. All right. So, so I pulled in Blackbird, and then loaded in, the pre-built Blackbird system the way I want it to trade. So at least with Blackbird here, let me kind of go back, right? So with Blackbird, right, you kind of set up whether you want a profit target or not, you know, or and what type of stop loss, like you said, fixed, or do you want it trailing, some kind of a indicator, moving average, whatnot. Oh yeah, and also I put in 100 stocks there, so that way we kind of get some significant monetary. So it's so funny because like a lot of times I'll just backtest one stock, you know, and you're seeing like $8 in profit. You're like, what's going on? Oh, one stock, right? Nobody trades one stock.
And
So-
that's like volume, right? That's the number of shares in this case for
Yeah.
stocks. Yeah, exactly.
Yeah, 100 shares there. Yeah, that way we kind of get some good monetary feedback there versus just one share. So, yeah, so using NinjaTrader strategy analyzer here, I've got Blackbird all queued up. And then in the instrument, I do have my custom basket there all selected so we can backtest against all of those. And the one thing we might have to do is wait for some of those instruments to be downloaded. I'm not sure how long this is going to take.
So you could apply this to any future, right? I mean, you could do this on the
Sure.
S&P futures or
Yep.
or micro NASDAQ or micro gold. You know,
Yeah.
really any kind of
Right.
futures instrument you might trade as well.
Yeah, exactly. Yeah, definitely, probably the micros, like you said. Yeah, it's a good way to start off there. So, yeah, and so, you know, there we go. And yeah, interesting enough, Lily seems to really like this system here.
So explain what we're seeing, because I see a lot of red, and you know, I don't know exactly. Now Lily stands out because it's not in the red.
Right.
Is that color coded based on results, based on profitable or not profitable results?
Yeah, I believe so.
According to the sample size, right?
Right. You know, since we kind of created our own tools here with Blackbird and Bloodhound, you know, I'm not an expert on the strategy analyzer these days anymore, but yeah, you know, NinjaTrader kind of color codes, you know, the red for negative values and yeah, white for positive results there. And if we look at the performance there, right? Yeah, Lily stands out as 6.1. And that is what percent profitable, or let's see, performance there. Yeah, profit factor. There we go. That's what I'm looking for. So, yeah. And so, I mean, basically, this is how fast it, you know, we were able to whip through this these days using the power of the computer to calculate all this, you know, versus the old days, like Jeremy was saying, you know, spreadsheet, you know, Excel, marking up your charts, you know, and so just a few minutes, here we go, you know. And of course, you know, if we had more time, yeah, you know, you could throw in the whole S&P 500, you know, as your basket to backtest against and see what's out there.
Right. And this is going back to the beginning of the year, as far as the date range, right? But you can change all this, and you know, it just gets that much more efficient, right? So if we went back, you
let's
know,
go back 5,000 bars. So normally if I do, yeah, if I do have a stock, it's usually 5,000 bars. So, and I thought I had that set to 2010. So yeah, that's right.
Hang on, Zach. You gotta
switch the dates, I think.
Yeah.
Start date, end date. Oh yeah, good catch.
Yeah, I'll just comment, like, this particular system that we sort of plugged in here, as you can see, doesn't really trade that often. So we only had a couple. That's such a small sample size, it's pretty hard to tell how well it's going to do.
Right. Yeah. The longer, you know, you get into the trap, it's not a trap, it's just the way it is. You know, you want to, the tendency is to trade or to test across as much data as you want, right? We talk about sample size. You want a big sample size, but you also want to do it in such a way that makes sense, right? We're not just analyzing data like we're data scientists. We have a concept of trend, and we want to know how does this perform in an uptrend and a downtrend and sideways trend. So there's that aspect of it. So you have to figure that out. And you could do that with indications, right? You could say ATR is greater than 25. I'm sorry, ATR. ADX is greater than 25 or 20 or whatever your threshold is. That could be one way to weed out trades that are not trending when the market's not trending. All sorts of things you can do here, but you also have to think about in sample and out of sample, right? Because if we'll talk about optimization at another date, but the goal of backtesting is not just to see how this would have done and just walk away if it doesn't do well. You'll want to tweak, like you said, Jeremy, at the beginning, you'll want to tweak the maybe the period lengths of this moving average or the size of your trailing stop or whatever it is, right? So you have different options, and eventually you'll hopefully get to a system that works, but then you have to test it out of that range to see, well, does it work going forward or going into a different time? And that becomes a whole nother layer of testing.
Mm-hmm.
Yeah. Yeah. And the other thing you got to be mindful of when you go back, especially if you're on a daily chart, right? And you're going back a decade or 2 decades. One thing that is easy to overlook is something like NVIDIA, where it has run up right tenfold.
Yeah.
Right. So in the last couple of years, right, you got some market moves that look normal for stocks, but every time a stock splits, right, before the split, it basically compresses that stock price. And I've noticed that really affects, when you got a compressed stock price, it affects your system, right? Because it strips out all the volatility within the instrument that used to be there, before the split, and it had a normal price movement. But so if you go way back on NVIDIA, we're now trading below $10 there. And so that compression obviously skews your backtest results, and it just kind of turns them into garbage mush,
Well,
because so you got to realize that the way it's trading in this compressed thing, is going to be far different than how it probably would have traded, before the stock split. So.
Right, and that's an argument for using percentages rather than points or values for stops and targets, and that's that kind of thing. Something we have something not quite the same in futures, right? Which is the idea of roll expiration.
Mm-hmm.
You've got this weird instrument that goes to almost a cash price, and then it rolls to the next contract, and it's 1 month out, 2 months out, 3 months out from cash price again. So it's got this difference in price that's noticeable on a chart unless you adjust for it. And that can result in negative values, which is a whole nother thing with backtesting, right? How do we test negative values? Look at crude during COVID. Crude went negative. That's not even with the roll. That's actually a real thing. And backtesters handle that. So futures, like stocks, we do deal with adjusted data, and how do you deal with that? I think one of the solutions is to build in percentages, not points, as far as your targets or your stops, which is hard to do, right?
Yeah. Well, yeah, I think you hit on exactly the reason why I like to use ATR, for setting my targets and stop losses, right? So that way it adjusts for that if there is some kind of compression going on with the volatility there. Yeah, right. Take full advantage, or shrink down, when there's no volatility. Yeah,
right.
Adjust with that market. Yeah. So,
And do you have a way to isolate difference? So, I might have a target, I might have a stop, or I might have an exit that just gets hit before everything else and doesn't let this market run, my trade run, or I don't know. Is there a way to adjust that pretty easily in your tool, which is to say either just uncheck it or obviously we can probably delete it altogether, but
Yeah, well, that's at least with this classic stock system, right? Obviously, the first rule before you backtest is know thy system, or at least use backtesting to get to know thy system. So,
right,
so that way yeah, should I have profit targets? Is what I'm trading, gonna run up and hit a profit target and then just run back down? How bad are those pullbacks? So yeah, so when I did this, I did it without a profit target, hence the term runner. Yeah, so for anybody who doesn't know, if you don't have a profit target and you're just using a trailing stop loss, in the industry they call that a runner. So yeah, allow the market to run up as far as it can go, and just trail your stop loss up with it there. So
yeah, the trade-off is you put in a target, you might be capping the profitability of that trade really early, right? If there is a runner in the market, you might miss out on a big part of the trend. Conversely, with the trailing stop, you're going to give back some of that profitability from the most profitable part of that run, which could be okay. If you kind of hamstring yourself by putting in a target, you might miss more upside even if you give back some with the trailing stop.
Yeah, and in the workshops I do, what I hear a lot of, and this is probably it sounds like a very smart thing to do, is they like to split the number of contracts or shares that they're trading, right? And so the first set will have a profit target, so at least you capture something, and then the other set will be the runner. So if there is more that the market will give you, you just as I guess, yeah, with stock traders, some traders will cost average in, so if you have a profit target, half of your contract's a profit target and the other half a runner, then you can cost average out as well, which is, nobody knows where the tops are. So, that sounds like, a reasonably good concept there. Cost average your way out.
So we do this a lot, Zach, Jim, and Mike and I. We'll do a 2-unit trade in the futures, and we'll put in a target, and that target could be very conservative if it's a contra trend trade. If it's going with the overall trend, we might make it a little more loose. But the idea is we'll tighten up our stop when we get that first unit, and we'll either have a really big target for the second one, or we'll let it run and trail the stop. So kind of that same idea. If we're thinking about futures, we're not going to do 100 contracts of micro gold or micro E-mini, but we might do 2. And so we would split that, like you had 100 and 100. We do 1 and 1, and they get in at the same time. So we'd have a 2-unit trade on, but then they have different ways to get out.
Yep. Yeah, exactly. So lock in, right? When you're splitting it, right, you can lock in something, before you get that deeper pullback there. So, and while you threw that idea at me there, I thought I'd backtest it real quick, and hey, it actually turned CAT, into a little bit of a break-even winner there.
Right.
Correct me if I'm wrong here, but I think even some of these, negative values improved a little bit as well. So
right. And this is all kind of iterations, right? So that insight that you just had might be an aha moment to say, well, what is it about these trades that lessened the hurt or even turned some profitable? Let's look at it. Let's delve deeper. What I think is really interesting or really helpful is how fast you were able to turn that around. I mean, you've got, looks like about 10 stocks or nine or 10 stocks, nine stocks maybe, over a
9
period, right? Which could be this year, could be longer. And you got all those statistics really quickly, in the matter of seconds, which is amazing to me.
Yeah, imagine doing this like over, say, minute charts though, you're greatly amplifying, of course, the amount of data and the amount of work you'd have to do. Like this is just an example, of course, over daily charts and over 10 years, which I guess if you're a stock trader, that's a very reasonable kind of time horizon, especially if you're looking at a retirement account. In those cases, you probably want to be comparing against just a simple buy and hold of the S&P or
Of
something
the
like that.
Correct.
That'd be your benchmark. But if you're looking at really smaller time frames, where we have a lot of customers that trade on a minute by minute basis or tick charts and whatnot over short time periods, then that's when you're looking at really honing in and trying to get a system that works for and needing the back testing results for that kind of thing, and then using the computer to do it like we're doing here.
Yeah, you bring up a great point, which is benchmarking, which we don't really pay attention to as day traders, right? But you're right. Over time, if it's better to buy and hold the S&P than even trade Lily, how Zach had set this up, then maybe the system isn't great for us. But on an intraday basis, it's a completely different thing. You look at 1 minute data, you look at futures market, and we don't have a benchmark. It's not like somebody's just sitting in the futures market. Well, I shouldn't say nobody's doing that, but longer term, there isn't a lot of, we're not competing with long-term investors. We're kind of looking at what's happening today.
Yeah, absolutely. A whole different world.
Yes.
But the principles and the tools are the same, or in what we're trying to demonstrate here.
Yeah. And the sheer quantity of what you'd be backtesting manually on an intraday chart. Yeah, going from a daily chart to a 1 minute chart, you're probably sitting at your desk for a solid week just to do,
do it by hand, right?
A year of backtesting, right?
Yep.
And you're going to want more data than that. So definitely utilize the computer.
Yeah, for sure. It really good. Zach and Jeremy, it's been too quick, but I think this is a good stepping off point, because the next iteration will do optimization, which I think is what is kind of like how it culminates. So but again, how can people find you and look at your awesome tools?
Yeah, so we're available at sharkindicators.com. And it turns out this week every year we do a Shark Week event. And it just so happens this is a week that we're doing it. In fact, the first presenter is happening sometime today. And it's basically a whole week-long event. We have our sale, and it's one of our biggest kind of sale events of the year. So definitely check us out. This is a great time to do so. And I think you have the month to figure out our stuff and see if you want to go with our tools.
That's great. And yeah, I love the Shark Week sale. I like that. That's great.
Yeah, we got to write somebody's coattails.
Hey, that's all right. That's all right. Well, great. Thank you gentlemen for joining us again. It always goes too fast, and we'll see you in a couple of weeks, I think.
Great.
All right. Sounds good, Tom.
Awesome.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.